Welcome, everybody, to another episode of the Ag View Pitch. We're heading into another marketing week, and it's a shorter one, 4 days. It's going to be the 18th through the 21st, and we have with us today Jim McCormick at agmarket.net. Jim, how's it going?
It's doing well, Chris. Thanks for having me on.
Really appreciate it. Always enjoy having you on. You got some really good perspective. You got a lot of years of experience, and you also have a great team. You guys all kind of work together and have a lot of really interesting things. I'm excited to have the conversation here today. I want to start out, though, with the funds. They have given us a gift, I think, here in February. And as we record right now, I just had Sloan get me the numbers for the crop insurance. We're at $469 on corn, and we're at $1060 on soybeans. And the funds have given us, on the 24 crop, a big gift. The basis has been taken away in some areas pretty significantly, but at the same time, I think we're net quite a bit better off than we have been. Talk a little bit about the funds and what you're seeing there, and are they going to keep it up?
Well, the funds, no doubt about it, Chris. I would call it a gift. I mean, they may have sniffed it out better than the market in general. They started reversing that massive short early in the fall and continued to build it. They definitely went all in chip-wise for that January report. And, you could argue the USDA came through with them with that lowering of that yield, 3.6 bushels. I mean, personally, I find it a little bit frustrating about how hard adjustment was. I'm glad they did it. It's good for the producer, but it would have been nice to know in November. I mean, the reality is they made a slight downward revision of yield in November, and we had 91% of the crop harvested. So we had a bulk of this crop in the bag and in the bin, in essence. We've harvested the final 9% of the crop, and then lo and behold, the government comes out and says it's a lot smaller crop, and that gave us this move. So, unfortunately, a lot of producers sold grain a little bit earlier than they probably would have if they known what they know now back in November. But it has given us a nice little push for the unsold bushels. We're back at levels that seemed very unrealistic just 4 or 5 months ago. It's also given us a shot of selling some new crop corn at a little bit better price than I would have thought. Because the fact of the matter is, why are the funds building this link? That's the question. A couple things. One, it's the supply side of the situation. The world stocks, Chris, when you look at the export of supply countries like the U.S., Ukraine, Argentina, Brazil, the suppliers of the world stocks to use are very, very tight right now because of the restricted. So the funds bought into that. The other thing I think you're seeing a little bit of fund buying in is due to the inflationary play. We are seeing inflation come back in. The Fed is, I think, they're trying to get this snuffed out. But if you saw the CPI and the PPI numbers that came out this past week, it's showing inflation is running closer to 3% than the Fed's 2% target. And maybe that's another reason why the funds are adding a little bit of link to the commodities, because that is how the old axiom is. If you want to play the inflation game, you want to own commodities. You want to own an asset, in theory, that hurts, as they put it, when it drops on your foot. So now the fund's best guess is around 350,000 linked in the corn. The real question now, Chris, is are they going to push it to all-time highs? Can they? That's the million-dollar question. And I think if you give the funds an inch, they're going to give a mile. And what I mean by that is our best estimate suggests that the farmers have sold all but maybe 35% of last year's crop. And I'm guessing for the most part, your listeners are saying, look, the grain I've got left, I'm not really going to sell it probably till I get a better handle of how my new crop looks. So if that fund starts to really buy into it, there's not your natural seller to sell into it. And that could really get us some exciting times, per se. But on the other side of the equation, when the funds are this long, if you decide to get them out of the position for whatever reason, be it the Trump trade policies, be it the fact they start worrying about new crop acres being too big, and they start exiting that door at the same time, you could see a pretty nasty correction because the fact that the producers sold so much corn this year, the end users got coverage all the way to the mid part of the summer. We've heard a few that got coverage all the way into August. So if the funds do start aggressively selling, they're going to sell into a market that has a lack of bids as well. So you're setting yourself up, I believe, for a lot of volatility going into spring and summer.
Mm-hmm. On the old crop stuff, what's your 2 cents on basis? Talk about basis for a second here and managing that piece of it as well, because we've seen some basis hits pretty heavy, in a lot of areas anyway, with this recent rally.
I think it's going to be a little bit tough. I mean, if you're in the East, I think it's going to improve a little bit quicker. The East, I think there's more corn. If you look at the corn in general, we got about 1.5 billion left over. I think a bulk of it's going to be in the Western Corn Belt as opposed to the Eastern Corn Belt. So the people listening in the Eastern part of the Corn Belt, I think you got a better shot at seeing a little bit better bump potentially. The Southeast corridor obviously really dealt with a drought, so that corn feeds into that. So that basis, I think, has a propensity to bounce a little bit better. You will see opportunities in parts of the West. I think I heard Fort Dodge is bidding $55 even, I believe it was, for corn delivered in June. So I think you're going to get those opportunities. But the one thing I'm going to tell you, Chris, if you got producers out there with unpriced grain, think about it. Fort Dodge is buying corn for June, which tells me they've got March, April, May needs covered. And eventually, if we have a normal crop, there's going to be 1.5 billion bushels of corn that we do not need in 2020, in the 24-25 cycle, and it's going to be rolled forward. You do not want to be that producer that's carrying that grain forward into the fall if we have the acres I'm afraid of. Because if you look at the economics of corn right now, we are buying corn acres that I believe we don't need, and I think that number is going to get over 95 million, potentially even more. And if you have a 95 million acres, you're looking at a trend line yield, close to trend line yield, your carrot will balloon to 2 billion. And all of a sudden, that 1.5 billion bushels of old crop corn, the elevators are going to take it from you at a discount. So when you get these bumps, go ahead and take advantage of it.
Mm-hmm. Well, I was going to ask you kind of a silly question, but what's wrong with just cleaning house if you can get $5 cash?
My opinion, clean house.
Yeah.
If you want to play because we're in a dynamic, like I said, if the funds want to run it, they could run it 50 cents. Mm-hmm. They could run it $1.
They're carrying the new crop up some too. So
they're going to carry the new crop up. You got a new crop. Most people got a lot of new crop corn to sell. On the other hand, if they get out, it could collapse on you. The one wild card about this right now, Chris, going into this old crop, I would argue, is President Trump and the tariffs. Mm-hmm. He's put a couple on, but he's backed them off quite a bit. We just put the steel tariffs on. And who's going to get hurt most by that? Mexico and Canada. We do a lot of trading with those companies. But as you notice, those tariffs didn't come on until March. So we're going to see if they get negotiated away. Time will tell what's going to happen with it. But you've got still a lot of uncertainty. So I would argue at $5 corn, when you consider where it was, in October, November, maybe the pragmatic thing to do is just sell it and maybe re-own it with some vertical call spreads where you've got low risk, where if we do have a weather problem, you got money in the game, but you've got it at essentially a defined risk parameter price wise.
Mm-hmm. I think the frustrating thing for a lot of growers is the fact that they have a high percentage of it sold quite a bit below the market, and you want to try to hit a home run on that last play. And sometimes you're better off just to take what you can get and look at your average price, and then even more so be looking into the next year, because I think that's really where our focus is going to have to be.
Well, the one thing also, Chris, that I've found I've been doing this for 30 years. It's not a lot of grain left over. Like I said, I think a lot of people are around that 30%, but there's a mental block for a lot of people. Mm-hmm. They have a hard time selling the upcoming crop when they've got the crop in the bin, even if it's down to 30%. Sometimes it's almost like a mental block where I can't hedge the new stuff because I'm kind of rooting against myself on the old crop, and they tend to just forget about selling the new crop and focus on that final 30%. And I'm going to argue there's a lot of uncertainty and a lot of risk. Like I mentioned, I think we're closer to 95 million acres of corn. Some people are above it. Weather is going to be the determining factor. But, like we talked before we hit the record button, the money, the dollars right now, no matter how you want to calculate it, say plant corn at this point in time.
So let's talk about acres for a minute. You mentioned 95 million, and we were talking beforehand, and I looked up our average break evens, and you've got Illinois there, and ours in an 18 state area, we're 1176 for cost production on soybeans, and we're 464 on corn. Corn has about a $70 an acre advantage in our data over soybeans. Can we get significantly over 95? If we do, we get to 96, 97, like some of those guys are talking. How much weight does that put on the corn market, and does it influence soybeans even more, wheat, or any of the others, in this whole game?
Well, what I think happens if you do get that big acreage shift, we'll see where it comes out as we get into right now, if you look at the corn to bean ratio and all that, it's definitely buying corn. Like I said, I think Illinois, I think U of I came out and said it was $11 break even for beans for producers in Illinois on average, $4.60 on the corn. So the money's there. Clients in Nebraska, their bankers are saying, guys are calling back saying, we need to redo this loan. We're going to plant corn. There's just no money in the beans. I didn't do the math here at 96 million acres. I do know if you do 95 million acres and have a trend line yield or very close to this year's yield, your carryout will balloon to 2 billion. And the reality is it's going to be very hard to raise the demand enough to offset that as a whole, unless South America really has a production problem. You get 96, 97. Is that out of the realm of probability, Chris? I know a lot of people say there's no way that can happen, but just the swing of the acres. We planted 94.6 million acres of corn just 2 years ago. So just the rotation that we're in, the current rotation, you're bringing close to 95 right there. You talk to clients in the Southeast, the cotton is not there. There's no money in cotton. Mm-hmm. They're going to corn. You talk to guys in Nebraska, the money they're losing. I had one client say, plain and simple, said, I don't want to borrow $2 million to plant corn. But he said, the fact of the matter is I can borrow $2 million and plant corn and make money, or I can plant $1 million, plant beans and lose money. He said, it just, the money is there. So, but what's going to happen potentially is if the market gets to that move and we get into late spring and we talk about these big acres, you might see a pretty good move in the market where the bean market tries to catch up and buy bean acres away from the corn at the last minute, or maybe cotton. So you could get a switch at the very last minute. But right now, if you're a producer, the money says plant corn. And I'm going to tell you, Chris, if you are going to be that way and you're going to listen to the market and say, hey, I'm going to follow the market, what the market's telling me, I'm going to plant corn. I'm going to tell you, you better go ahead and lock some of that, some of those the market's telling you to do it. But if you don't listen to the market and go all in and say, I'm going to plant it because the price is there, you got to lock that price in, folks, because, it doesn't do any good to listen to the market if you don't sell the market.
Mm-hmm. Yeah. At least sell a pretty good percentage of those acres that you decided at the last minute to shift, because those are the ones that can really mess with you if you don't take advantage of whatever the math is that you just did that created that decision. I want to hitch up a little bit too on the energies, with Trump. You mentioned Trump and tariffs, but there's a whole bunch of other things that Trump's doing too. He's with Doge and stuff. We're cutting expenses in certain departments. I don't know that he's hit USDA or FDA yet or anything, but I think every department is going to get, is going to go through the laundry list of every single line item and figure out where the waste is. In the process of doing that, he's also drill baby drill and doing like 18 other things and really driving the Democrats crazy because he does about 50 things at once. Talk a little bit about both of those things. Is there anything else, that you see coming where maybe we're getting into some of the departments a little bit and raising some heck? Does that have anything to do with the market, or maybe not at all? And then the same thing with energies, as he probably is going to drive energy prices lower in general eventually.
Well, let's talk about the drill baby drill aspect, okay? Now, when he talks drill baby drill, one thing you got to remember, Chris. We are producing more energy now than we ever did in our lifetime. Mm-hmm. We are pumping more crude oil now than we ever did before. We're actually pumping every additional gallon we drill is not going to go on to the U.S. consumer per se. It's going to go on to the international market. He's trying to get India to buy more crude, okay? But the thing you got to understand, he's trying to do it by he's cutting waste, or he's cutting red tape, and he's telling the energy people to drill, okay? But the energy people right now, Chris, are making massive amounts of money. One of the big energy firms is putting $20 billion in Stibot, just bought back this past year of their profits. They spent $20 billion with a B buying back their stock. They're going to spend another $20 billion in 2025 buying back their stock. Okay, so President Trump's saying to drill. Do you think they're going to drill? Because essentially they're making massive amounts of money. Drilling is like expanding corn acres. It's like, hey, President Trump wants to get corn cheap to the American consumer. It's not what the producer wants to hear. Let's take ground out of CRP. It's not good ground, but we could drive the price down. So if you're an energy guy, how much are they really going to drill? Because they're making so much money. The other thing I'm worried about, this is done, if it's done via presidential, authority in essence, but it's not done by law. Okay. Here's what they risk. Let's say they decide to drill and it takes a year or two to get through the red tape, and you start pushing that hole ground in the hole, that drill in that hole 2-3 years from now. Okay. You may not get a return to year 4. And if you look at how just the presidential dynamics go, we had 4 years of Biden, 4 years of Trump, 4 years of Biden, 4 years of Trump. If you look just how we swing, there's a decent shot, good, bad, right, wrong, we'll swing back to the Democratic president. Okay. Trump's drilling on a presidential, not by law, but essentially saying, hey, I'm cutting red tape. You could theoretically run into a Democratic president that comes back in there and says, Trump said drill, baby, drill on an economic emergency. I'm going to carbon tax the living tar out of these drills because I've got a climate energy. So I don't know if big oil is going to drill on what the Trump wants. Fearful in 4 years, whatever they do could be steamrolled and just rolled back on them or carbon taxed so they're not profitable. So I'm a little bit hesitant on that where they're actually going to be unless you put it into law. Tariffs, quite interesting on the tariffs. Trump's talked about tariffs being used to finance part of the tax cuts. The Office of Management Budget says you really can't count tariffs as offsetting the budget unless you put it into law, because it can flip on and off depending on how we've seen how President Trump has used the tariff threat here, put them on, take them off. Mm-hmm. So here's what you got to watch for, Chris. As they go into this budget resolution here and they try to extend the tax cuts, if they start arguing that the tariffs are going to pay for part of it, is that part of the law? Because if they put it into the tax law that you're going to put a 10% tariff on everything per se, then it's almost impossible to get those tariffs back off down the line, because it's the same situation. It's kind of like Obamacare. You may love it, you may hate it, but the fact is part of the reason they could never get rid of it was because it's law as opposed to essentially an executive order. That's where the key, if the tariff's an executive order, it could come off. If it's in the tax law, it's there to stay. Something to just keep an eye on.
Mm-hmm. It'll be interesting to see what he can get done in Congress. If he can get some of these executive orders through, like you said, and get some laws made based on getting some traction through Congress. But that'll be
the key. Like I said, if he can get some laws in where essentially the drill baby drill is more not just executive order, but it is laws that are enacted to essentially entice the big oil to actually do it, I think they will follow through and do it. But I think they're going to be a little bit leery just on the executive order, simply because, if you just look back in general, what happened, when President Obama came in, he unwound what George Bush did. But when Trump came in, he unwound everything that Biden, that Obama did by executive order. Biden unwound what Trump did. Trump unwound what Biden did. And that's where the difference between executive order and congressional order. And that's what I find very frustrating. You can like Trump or you can hate Trump. I don't care. What I would just like is to know where we're going to be 5-10 years down the line. And the businessman like yourself, it's hard to make decisions, for your farm and tax planning when it gets whipsawed every 4 years, depending on who's president. It's much better when you build it into the tax code where you go, okay, because once it's in tax and once it's in law, it's much harder to actually repeal. Mm-hmm. You may not like the law, but at least you know where it's at.
Mm-hmm. For sure. All right. This has been a really good conversation. What I want to do now is just circle back to kind of where we started and some nuts and bolts for producers to think about in the next couple of weeks from a practical standpoint. We've been talking about all the fundamentals and all the things going on, and there's some technical things. Maybe you want to hit on something there, but what are the 2 or 3 key things if Jim puts his farmer hat on and says, I'm sitting in the seat here with 20% of my old crop left here on corn. Maybe the beans are gone, or maybe there's a truckload or 2 left. Hopefully not hardly any left. But what's your thought? And you can hit on wheat too. But what are the things that that if you got your farmer hat on in the next 2 weeks that you're paying attention to, and any decisions that you would be thinking about or parameters that you think people should be thinking about?
Well, based on what I know on right now, and that could easily change, I'm just going to give that caveat with President Trump and the tariffs and all that. But based on what I know right now, if I'm a producer and I've got old crop beans left, I'm trying to get rid of them ASAP. The fact of the matter is Brazil's got a big crop. It could get a little bit bigger, a little bit smaller, but the fact is they're selling beans $1 cheaper than us. Our window to sell beans in the world market is drying up really quick. The processing, we'll see where we're at right now. Bean meal prices continue to struggle. Bird flu continues to be a problem. That's going to be a problem. Get rid of the old crop beans. As for the corn, you're carrying down to those minor bushels. I would rather sell $5 corn and re-own it with some kind of maybe an option play if you want to keep some skin in the game. But we've had a pretty good run, better run than I would have thought. I think you got to reward this market, and if you're going to carry bushels in, I think you got to realize if you're carrying those bushels in the summertime, you may make $1, you may lose $1. You got to be cognizant of it. If you're conservative, move them and then re-own with paper. On the new crop corn, we are now, crop insurance would suggest we're going to get a lot of acres. The economics, as Chris and I have said, are getting a lot of acres. I would start laying off risk. Would I sell everything in the cash market? No, because we are very, very dry across the Midwest right now. It's been a very dry winter. If this pattern change does not change the current pattern, the argument is by the private weather guys is we've got a risk of dryness issues. But, we are going to plant a lot of acres. So I'm encouraging guys to start selling grain. I like using May short dated options, Chris. It'll at least give you a floor through the crop insurance window, or when we get that, as well as the March 31st acreage number. Or I've had some clients go out to even doing some hedging or protection in the July short dated, which essentially protects the grain before pollination and recalibrate for it. New crop beans, man, they're the tough one right now. It's hard to sell beans at a loss, but if you're really nervous about them, I'd go with more like an option play at this point in time. The beans are going to be the wild card. I think there will be a time where the bean market will gain on the corn, because eventually that trade's going to realize the spread's way out of whack and there's going to be some profitability on it. Wheat, that's the one thing I'm a little bit friendly on the wheat. I think you got potential for dryness issues in the U.S., winter kill issues. The funds are massively short wheat. I think they're going to start unwinding that trade. I think part of the reason why you saw wheat strength this past week was they were essentially getting out of that massive short position. So there's one thing I'm a little bit friendly on. It is the wheat at the moment.
Great stuff. Great stuff. The one thing we didn't mention that, you and I talked about was kind of back to that acre thing real quick. I wanted to hit on that as well. When you look at the insurance piece of the puzzle, I was figuring, just talking with you earlier, there's about on average with our clients, there's about $140, $150 an acre higher level of insurance coverage you can do too. So there's a bunch of things here in this acre thing. And I would caution people though too, when you look at doing corn on corn, you do take a little bit of a little bit of a yield hit potentially too. And so I think that needs to be factored into the math. And if people want to reach out to us and let us know on any of those things or need any help running the numbers or want us just to review your numbers, it doesn't matter what system you're using, let us know and we can put another set of eyes on that stuff if we need to. But Jim, going to give you the final word, anything you want to wrap up with?
Well, the only thing I'm going to tell you, Chris, is, you look at where we are, it can look very dark. It can, you look how weak everything looked just a few months ago. Everything was doom and gloom. We've had a heck of a rally. This thing could go. The one thing I like to tell people about it, just real quick about the markets, how we trade, Chris, in the report nowadays, the government really, on a report day, it's one of those situations you wait till 11 o'clock and you wait for the funds to make the move. And the market will either go up or it'll go down. And essentially 99% of us go, well, it must have been bullish or it must have been bearish. And then you look to find out what the numbers are. The computers will trade it quicker than the human can look at it. Yep. With President Trump and the way he runs his administration, we are doing that all day long. You never know when the tweet is going to move the market. You never know when the comment, which is then going to be relayed to a tweet. There was a comment that he made in the economy. Reuters essentially tweeted the comment and it moved the S&P 35 points in less than a minute. We are in one of those folks, Chris, where it is report day every second of the day. So if you're a producer out there If there's price levels that you want to sell against, even if they're 20, 30 cents above the market, get them working, because the market will move on a tweet that you had no idea. It may be a tweet. The man is an interesting man. He will put tweets out 11 o'clock, 12 o'clock in the morning, because he's president, and it'll move the market. And by the time you wake up, you might have missed the opportunity. So the one thing I'm telling people is figure out your numbers, get your orders working, be it with a broker or be it with a cash market. Because one thing with President Trump is he does bring volatility to the market. That's a guarantee.
And he never sleeps. So to your point, your opportunities are probably going to be at 1 o'clock in the morning. So,
Exactly.
So for sure. Well, hey, Jim, this has been a great conversation as usual. We're definitely going to get you back here and kind of see how things are going. We get into March and get a little bit smarter, a little bit more data, and kind of see, as we get a little bit closer to these acre shifts, see kind of what you're hearing from your clients and what we're hearing. If people want to get a hold of you, what's the best way if they want to chat with you on some strategies or some different things to think about? What's the best way to reach you?
Yeah, the best way to reach any of the Ag Market members, honestly, Chris, just go to agmarket.net and you can sign up right there if you'd like a broker to talk to you.
Awesome. That sounds good. Thanks, Jim. Appreciate it.
Thank you.
All right. Thanks, everybody. Really appreciate you being on here today, and we'll catch you again next time on the Ag Pitch.